Back to another video. Today we're going to take a look at the Japanese yen. Now the Japanese yen, we're going to look at it as a standalone. This is going to make it a lot easier for you to go out there and trade any currency against the yen as well. Now if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, you know exactly what it is that you need to do. Smash that like button just so that the video can help and reach other people just like it had reached yourself as well. Now this is the yen index, the same like the DXY. Now in a situation like this, whatever you expect on here is a counter trend or counter trade that you can do against any other party. So if you after this analysis, you should be able to understand what you can expect from a Euro JPY, GBP JPY, AUD JPY, and all of that other stuff that goes with it. First things first. So today we had the Japan final manufacturing PMI that came through at 53.5. As we know, in terms of PMI, anything above 50 is good for a currency. Apart from that, the yen has been oversold and a correction is expected if a continuation is seen in the market. We can definitely make use of that correction by trading against other currencies, because we know that the yen has been quite weak based off the negative data that got released based off the GDP that got impacted negatively through the earthquake that was experienced. But let's go over into the technical analysis, and then we're going to look at some order flow data as well. Now if you start here on the monthly time frame, what do we see? Now we can see the market had printed this massive overextended information. Now after an overextended information, you expect a pullback to the left leg before that continuation. Now the market had started this correction already. Now if you drop down on the weekly time frame, what do we see? Now from a weekly perspective, we can see how the market had printed this candle with this massive wick, where you normally expect the next candle to go and fill in that wick. The market also printed this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low. Then you can see we did not have a pullback to the 0.382, so we can definitely expect the market to go and test that level first before we could potentially see a pullback in the market. Now if you drop down on the daily time frame, what do we see? Now from a daily perspective, we had this massive impulse, we had that correction, and if you take your Fibonacci from the low to the high, sorry about that, if you take your Fibonacci from the low to the high, you can see how the market had tested and rejected, you can see how the market tested and rejected the 61.8, which is known as the gold ratio in the market as well. Now if you adjust your Fibonacci to get the take profit at the minus 27, you can see that it's lining up perfectly with that previous structure that we had in the market there as well. Now there is a very good possibility that the market can continue this move to the upside. However, what we need to be conscious of as well, that if you look slightly left over here, you can see that the market had printed this strong level of support that got broken, became resistance did not hold. Market broke above that, became support, broke below that support, and all of that support became a resistance. And the market is currently testing and rejecting that structure as well. Now the best way to approach the situation is, if we can get a clear daily close above this level, then on the retest, then this will give us a further confirmation. Now the best thing you can do for yourself is just to monitor the Japanese yen, and if you get a clear break on the daily time frame above this level, then that serves as a confirmation that we can definitely expect this continuation to the upside for the Japanese yen, meaning that you can expect a lot of the currencies trading against it to weaken as well. Now that's based off the technical analysis. Now next up, if you do go and have a look at the order flow data, so this is the commitment of traders, and this tells us what the big banks, hedge funds, and institutions are doing in the market. We can see a base of the last report how hedge funds, they actually came in and they added 1,546 buy positions, which is long positions, and they closed a massive minus 10,106 sell positions. We can also see how the overall net positions increased from 4.6, now sitting at 11,652, giving us a further confirmation that we can definitely expect the yen to increase in value either in the short term and potentially in the long term there as well. Now, the way that you are going to do to trade this is quite simple. So any pair trading against the JPY, so Euro JPY or AUD JPY, you're basically going to determine or predict that this currency is going to get weaker against that currency, because you expect this currency to increase in value as well. But I will make further detailed breakdowns on these currency pairs like the Euro JPY on the mid-market breakdown. But if you are an experienced trader, you should be able to know exactly what you need to do if the bias is bullish on the Japanese yen. Now that's all from my side. Thank you for your time, and as always, cheers for years.